Hello everyone, in the current video we will understand the problems of amalgamation. So in this video we'll take up university questions. University questions of amalgamation. How the university will ask the questions regarding amalgamation in the examination. We'll take up first question. So my entire idea of doing these questions to making you people equipped or aware how to solve the problems in the university examination, right? See the question. Right, the question number 6 here we are taking. So balance sheet of Vanish Limited as on 31st March 2009 is as follows. Share capital and assets under the 4 lakh shares of rupees 10 each. Current liabilities we have given, and further fixed assets, cash at bank, other current assets, and profit and loss account we have given on the asset side 4 lakhs. So bear in mind, whenever profit and loss account given on the asset side, it does means that it is the loss incurred by the business during the past years which is accumulated. So this loss is always a fictitious asset, right? Then so this balance sheet belongs to whom? The balance sheet of Vanish Limited. This balance sheet. Shine Limited agreed to purchase Vanish Limited for a price of 34 lakhs. So the amount of PC directly given in the question, that is 34 lakhs. Hence it is a lump sum method of purchase consideration. The amount of PC directly given in the question. Discharge of purchase price is done through issue of 3 lakh shares of rupees, equity shares of rupees 10 each in Shine Limited at an agreed value of 11 per share and balance in cash, right? So here we have given lump sum method and the word balance in cash is also used. As we have already discussed in the earlier videos, whenever we find balance in cash, most of the times, not always, most of the times it will be what? Net assets method. But here if you see the language plays a very important role in amalgamation. So here in the language we have given balance in cash, but it is a lump sum method of problem, right? So whatever how many shares we are giving? 3 lakh shares of rupees 10 each, but the market price of the share is 11. In the sense 1 rupee is said to be as a premium amount. Then prepare realization account, Shine account, shareholders account in the books of Vanish Limited. So we are asked to prepare ledger account in the books of Vanish Limited, right? So which company it is? Vanish company. So Vanish company is which company? Transferor company, and Shine Limited is the transferee company. Vanish Limited is a vendor company, or it is purchasing company. Which limited? Shine Limited, right? So here who will pay PC to whom? Shine Limited will make the payment of PC to Vanish Limited. For what sake? For the taking over of assets and liabilities. Directly we are asked to prepare the ledger account. Whenever we are asked to prepare the ledger account, so we can directly start preparing the ledger account. What are the ledger account we are asked to prepare? We are asked to prepare realization account. The first account is realization account. Then Shine Limited account, shareholders account in the books of Shine. So we will prepare first. Directly I am preparing ledger accounts. So this is realization account, right? Then next is Shine Limited account. So we'll prepare Shine Limited account. Then one more account I will prepare in addition to this, shares in Shine Limited account. Shares in Shine Limited account. And the final account is lastly shareholders account, that is equity shareholders account, right? That is equity shareholders account. So these are the ledger account that we need to prepare. So these ledger account in the books of whom? That is Vanish Limited. We are preparing in the books of whom? Vanish Limited. Who is Vanish? That is Transferor. Vanish is the transferor. So simply the ledger posting, right? So what is the first entry? First entry is realization account data to various assets. So we have given all the assets: fixed asset, cash at bank, other assets, and P&L account. Except, which asset? Except fictitious assets. Fictitious asset, that is P&L account, we should not take. Right? So first entry, realization account data to various assets. In realization account to various assets. What are the assets? Fixed assets, cash at bank, current assets. So fixed asset to cash, other current asset, OCA. I have written the abbreviations, other current assets, right? So I will not take P&L account. Clear? So directly I will be taking 24 lakhs, 1 lakh and 21 lakhs, right? So 24 lakhs, 1 lakh and 21 lakhs, right? 1 more 0. Then next entry, transfer of external liabilities. Which liabilities? External liabilities to realization. So external liability, we have current liabilities. So what is the entry? Liabilities to realization. So in realization we write by current liability. How much? 10 lakhs. Next entry is purchase consideration due entry, PC due. How much PCs we have to receive? 34 lakhs we have to receive. So the entry is from whom we have to receive? From Shine Limited, being transferee company and purchasing company. So how much? 34 lakhs. So the entry would be, what is the entry? Purchase consideration due entry we are passing. From whom it is receivable? From Shine. So the entry would be Shine Limited account data to realization. In realization we write by Shine Limited. Shine Limited. How much? 34 lakhs we write. Why 34 lakhs? This is the entire amount of PCs, 34 lakhs. In Shine Limited, what we write? To realization. That is 34 lakhs. Right? Once this entry is done, now PC receiving entry. What is the entry PC receiving? Receiving entry is how we are receiving in the form of shares. How much? 3 lakh shares of rupees 10 each. That is the face value and 11. So 3 lakhs into 11, 33 lakhs in the form of, how we are receiving? In the form of shares, and 1 lakh in the form of cash. That is balance in cash. Clear? So 33 lakhs into 11, 33 lakhs. Out of 34, 33 is gone. Left over 1 lakh will be in the form of cash. Therefore, the entry would be cash account data, shares in Shine Limited account data to Shine Limited. So cash account we are not preparing. So shares in Shine Limited we have prepared. So to Shine Limited. How much? 33 lakhs I am writing, because cash 1 lakh I am not writing, because we are not preparing cash account. So cash account data, shares in Shine Limited. In shares in Shine Limited to Shine Limited. And in Shine Limited what we write? By cash, by shares in Shine. Shine Limited. This is 1 lakh cash is, and this is 33 lakhs. Right? So once this entry is KPC receive entry is done, then if any liability is not taken over by the transferee company, all the liabilities, any asset not taken, sale of asset not taken over by the transferee company, all the assets, then payment of liquidation expenses, no information is here. Then payment of liquidation. Next, transfer of equity share capital to equity shareholders account. This equity share capital and reserves, we don't have any reserve, but this equity share capital we have, it should be transferred to which account? Equity shareholders account. The entry would be equity share capital account data to equity shareholders account. So we have prepared equity shareholders account here. In equity shareholders account with 2 equity share capital. Equity share capital account at R2 entry is equity shareholders account. Equity share capital is a liability, shows credit balance. How to close? By transferring to debiting. So the entry would be equity share capital account at R2 equity shareholders account. So in equity shareholders account, what we write? By equity share capital. How much is the capital total? 40 lakhs. Be careful while posting the ledgers, right? So you can make a mistake, but try to remember the entry. Based on the entry, you can post the transaction, right? Once this is done, equity shareholders we have transferred. Then we have one more item, that is fictitious asset, that is P&L account debit balance. We did not transfer to anywhere. Now we need to close this account. Now P&L account is the last showing debit balance. How to close? By crediting. Which account should be debited? Equity shareholders. So the entry would be equity shareholders account data to profit and loss account. How much P&L account? 4 lakhs. Am I able to make you understand? This 4 lakhs will be debited in which account? Realization. Equity shareholders account. Clear? Then once this is done, close the realization account and find out the profit or loss on realization account. So we will close the realization account first. So realization account, this 34 lakhs plus 10, we are getting 44 lakhs. This one is our, this 24 plus 20, 44 plus, so 46 lakhs total we are getting here. So both the sides will write 46 lakhs. Very simple question it is. And we are getting the balancing figure. How much is the balancing figure? The balancing figure we are getting 2 lakh rupees. So this balancing figure is to be written by equity shareholders account. So this is the realization loss transferred to which account? Equity shareholders account. So in equity shareholders account, what we write here, it is credited. In equity shareholders, it will be debited to realization. How much? 2 lakhs. So this is the balancing figure of realization account. Once this entry is done, now what we have to do? Realization is done. Next, payment to equity shareholders. What we have to pay? We have 2 things to make the payment. One is cash, another one is shares in Shine Limited. So the entry would be equity shareholders account data to cash to shares in Shine Limited. How much is the amount? Cash amount is 1 lakh. Shares in Shine Limited is 33 lakhs. Right? Now we need to close this account. This account should always, so here this account is what? Getting tally with 34 lakhs. Which account? Shares in Shine Limited. Shine Limited account is tallied with 34 lakhs, right? This 34 lakhs. Now this shares in Shine Limited account. So we have debited here. In shares in Shine Limited, what we write? By equity shareholders account. How much? 33 lakhs. Hence, this account even will get tallied 33 lakhs. So like this, we have to close the ledger account. Finally, always bear in mind our, what we call this account. Which account? Equity shareholder account should tally. Always it should tally. So debit side credit side only one item, 40 lakhs. So we are writing 40 lakhs. And this summation 4 plus 2, 6 lakhs. 6 lakhs, 34 lakhs, that is equals to 40 lakhs. This gets tally. So like this, we need to close all the ledger accounts, right? So this is the way of preparation of the accounts, right? So we'll take a very quickly another question without wasting further time, right? So here it is also one of the very easy questions of Osmania University previously asked. The question is Moon Limited and Star Limited agree to amalgamate a new company called as Planet Limited? So this kind of question was asked immediately preceding the university question papers. Has been formed to take over the combined concerns as on 31st December 9. After amalgamation, after negotiation, the assets and liabilities of the two companies have agreed to be shown in the balance sheet. So these values we will be taking over it. The liabilities, Moon Limited, Star Limited, asset, Moon and Star. So these two companies are coming together and forming a new company called as Planet Limited. Show how the amount payable to each company is arrived at and prepare the amalgamated balance sheet of the new company. So we are asked to prepare amalgamated balance sheet of a new company. Clear? So first what we need to do, we need to calculate PC. So calculation of purchase consideration, step 1. So as the place is available here, I will write calculation of PC. PC stands for purchase consideration. So the question arises, which method of PC it is? It is a net assets method. How it is net assets method? So no information pertaining to the shares, no information pertaining to the amount payable to each company is given, and we are asked to calculate. So calculation of PC, this is particulars, this is Moon, this is Star. So coming together, they are becoming Planet Limited collectively, right? So what is the procedure? The procedure is to calculation of PC procedure is what? First we need to take all the assets, agreed or market value of assets, agreed or market value of assets taken over, very important, taken over. So here all these values, so assets and liabilities of two companies have been agreed to be shown in the following balance sheet. These values only we are taking over it. So we see, actually you need to write individually, right? In order to reduce the time, I am taking collectively, right? If any fictitious assets, we should not take, bear in mind. So summation of these assets I am writing, that is 1,13,000 and 65,000 I am writing, minus agreed or market value of external liability, that to taken over, right? So when you see the external liabilities, we have only one liability, that is sundry creditors here. So share capital, reserves and P&L, these are the equity shareholders amount, and only sundry creditors is the external liability. So sundry creditors comes to this 8,000 here and 5,000 here. So the amount of PC, resultant amount is amount of PC. The amount of PC is how much? 1,13,000 minus 8,000, that comes to 1,05,000. Then 65,000 minus 5,000 is equals to 60,000. So this is the amount of PC. Then here we have not provided any information pertaining to how the payment of PC is made. Then standard assumption is it will be paid in the form of equity shares, right? So once we have calculated the PC, then we are asked to prepare the balance sheet. Which balance sheet? Amalgamated balance sheet of, that is which company? Planet Limited, that is new company. So we will prepare the balance sheet of which company? Planet Limited, right? So directly we'll proceed to the preparation of balance sheet. So this is the balance sheet of Planet Limited. Balance sheet. So now how to prepare the Planet Limited balance sheet, that we will understand. First we need to write all the assets. So here these assets should be written individually as I told you, but I am writing collectively to minimize the time. So the assets, all the assets and liabilities. So under that assets first. So total of the assets I am taking, that is 1,13,000 plus 16,000, that is 113 plus 65,000. So that is equals to 1,78,000. So the total amount of the balance sheet is 1,78,000, right? Now come to the liabilities part. In liabilities part, first we write share capital. Under that, the PC is how much? PC is 1,08,000 plus 60,000. So 1,68,000, right? Shares. So what was the share of each? 10 rupees. So we presume that 16,800 shares of rupees 10 each, or else you can directly write 1,68,000. You can directly write him in the amount. So we are presuming here that company is giving shares of rupees 10 each. So that's the reason why I have written 16,000 shares of rupees 10 each. That is 1,68,000. Then we need to write. Do we write this share capitals? No, already these are transferred. This 1,50,000 were transferred to equity shareholders. So this is the reserve on P&L. Only we have taken one liability, that is sundry creditors. So sundry creditors. Sundry creditors summation is 8,000 plus 5,000. That is equals to 13,000. Right? So, right. So 8 plus 5 is 13,000. Clear? I hope we made a mistake here. Okay, so don't worry. By making mistakes also we can learn. Sorry, the PC amount is 1,05,000 plus 60,000. So it is 1,65,000, not 68. Right? It is 1,65,000. Sorry. So the PC amount is 1,65,000, that is 1,05,000 plus 60,000. Then 13,000. So 1,78,000. So balance sheet tally with 1,78,000. So if you are little bit perfect, then you can easily do the problem. See, this is a university question paper problem. I have done in 5 to 6 minutes. So easily you can do. Right? So once this is done, we will take up one more university question and we will conclude this video. Right? So our one more university question. Right? So this is also one of the most important university question. Right? So here the Janta Company Limited is absorbed by Deluxe Company Limited, and in consideration thereof, so Janta was absorbed by Deluxe. So Janta is the transferor, Deluxe is the transferee, right? Janta is selling, Deluxe is taking over. Consideration thereof, the later company agrees to take over. The later company is the Deluxe company, take over the trade liabilities, only business liabilities, not other liabilities, to pay the cost of absorption 6,000, to discharge the debentures at a premium of 10% by the issue of mortgage debentures in Deluxe Limited. Always I told you, any payment made to debenture holder is not a part of your PC. It does not include you in your purchase consideration. And to pay a sum of 20 in cash plus 4 fully paid shares of rupees 10 each in the Deluxe Company Limited at a market price of rupees 15 per share for each shareholder. So what each shareholder of Janta Company is getting? Rupees 20 per share, as well as 4 shares of rupees 10 each fully paid at 15 per share. So the excess amount of 5 is called as premium. On the following information of on the following balance sheet of the Janta Company Limited at the on the date of absorption, give necessary journal entries in the books of both the company. Oh, we are asked to write the journal entries now. So this is the balance sheet. Balance sheet of which company? Janata. Janata is transferor. 40,000 shares of rupees 50 each, debentures, sundry creditors, reserve fund, sinking fund, employee saving. This is an external liability, amount payable to employees. P&L is a reserve, shareholders' money. So all the assets we have given. Now we need to write the journal entries. Prior to that, we need to calculate the purchase consideration. That is the very, very important step of the amalgamation, right? So now I'll do here calculation of PC. Now, which method of PC it is? It is share exchange method. Which method? Share exchange method. How you have arrived at share exchange method? Because he has given shares for the Janta company and a balance in cash and lump sum amount of PC is not given. Right? When we do the elimination process of methodology, first we'll see any lump sum amount is given by the company in the form of PC. No, in this question, no lump sum amount is given by the company in the form of PC. Then we will see balance in cash or assets taken over values is given. No assets taken over values given. Hence, it will be the final method, that is share exchange method. Right? So come to calculation of PC. First, cash. What did he say? So as I told you, debenture payment and liquidation expenses does not form a part of our PC, right? So PC does not include debenture payment and this cost of liquidation. Leave it. Then rupees 20 per share in cash. So cash is 20 per share. So how many shares we have in Janta Limited? 40,000. So cash is equals to 40,000 shares of Janata. Each will get 20. So 40,000 into 20, that is equals to 8 lakh rupees they will get. Alright. Then further it says that 4 fully paid shares of rupees 10 each at 15 per share. So one shareholder will get 4 shares. So 40,000 we have, 40,000 will get how many shares? So 40,000 into 4 by 1 is equals to 1,60,000 shares. How many shares? 1,60,000 shares. Therefore, share capital here, that is 1,60,000 into 10 rupees, that is equals to 16 lakhs. Then share premium or securities PM, that is 1,60,000 into 5, 8 lakhs. Collectively, the PC is 32 lakhs. So like this, we need to calculate the PC. Just simply, cash is given 20 rupees per share. How many shares? 40,000 already we have in Janta Limited. 40,000 into 20 comes to 8 lakhs. And 4 shares for 1 share. So one shareholder of Janta will get 4 shares in Deluxe. How many shares we have in Janta? 40,000. How many they will get? 1,60,000 shares. So share price, share capital is 10, premium is 5. That I have segregated these values and written, and the summation is called as the PC. Now we are asked to write what? Journal entries. Journal entries in the books of who? First, Transferor. So journal entries we will write first. Journal entries in the books of which company? Janta Limited. Janta Limited. Transferor. So we are writing journal entries. First journal entry. Transfer of assets to realization. What is the entry first? Realization according to various assets. So the entry is realization according to assets. See, I am writing all the assets collectively, whereas it is not the practice in the examination. You must write all the assets individually, because to minimize the time of this video, I am writing collectively, right? So realization according to various assets, right? So how much total is? 40 lakhs 10,000, right? 40 lakhs 10,000 being assets transferred to realization, right? And the next entry, transfer of external liabilities to realization. When you see the external liabilities, we have only three external liabilities. One is debentures 15 lakhs, sundry creditors 1,50,000, and employee saving account deposit and interest. These three are external liabilities. So these three will be transferred to realization, right? So asset shows debit balance, how to close? By crediting. Now liability shows credit balance, how to close? By debiting. So the entry would be debentures account data, then sundry creditors account data, then employees saving account deposits account data. I have written abbreviation, right? How much is the value? Debentures are 15 lakhs, then sundry creditor is 1,50,000, then employee saving bank deposit is 80,000, right? Just check once again. Share capital not liability, debentures, sundry creditors, reserve fund is not, sinking fund is not, only reserve fund and sinking fund shareholders money, right? Only saving bank deposit, then P&L is also shareholders. To realization. So how much that is? 15 lakhs plus 1,50,000 plus 80,000. That is equals to 17 lakhs 30,000. Clear? Once the second entry is done, what is the next entry? PC due entry. PC due entry, from whom we need to receive the PC? Deluxe Limited. Therefore, Deluxe Limited account data to realization. How much? Total amount of PC is 32 lakhs. With the amount of 32 lakhs is the PC. Just now we calculated the PC, 32 lakhs. Done. Once this is done, the next entry is PC receiving entry. How we are receiving? In the form of cash. So cash account data, cash or bank, anything, and shares in Deluxe Limited account data. So cash account data, how much cash? 8 lakhs we are receiving in the form of cash. Just now we calculated here in the process of PC calculation, you can observe 8 lakhs. Then shares in Deluxe Limited, that is 24 lakhs. Why 24 lakhs? The total amount of this 16 plus 8, right? So collectively we need to write. To from whom we are receiving? From Deluxe Limited. How much? Total is 32 lakhs. Clear? So once the PC receiving entry is done, next entry is sale of asset not taken over by transferee, payment of liabilities is not taken over by transferee, right? So we have one liability, that is payment of liability not taken over. Which liability? Debentures were taken over and discharged by the company, but the employee saving account is not taken over by the transfer company. Sir, how you can say employee saving account not taken over by transferee? But the question clearly says that agree to take over the trade liabilities. So employee saving account is not a trade liability, but even debenture is not a trade liability. What do you mean by trade liability? Trade liability comprising of creditors, bills payable only. In the sense, the liabilities which are generated during the process of doing the business. So debentures, because it is given debentures are taken over, therefore we are taking debentures. But employee saving account is to be paid off. So the entry would be, now this employee saving account in which account? In realization account. So the payment entry would be realization account data to cash or bank. How much? No amount is given, therefore directly the same amount will be given, that is 80,000 will be paid off. So like this we will pay off the liability which is not taken over by the transferee. So sale of asset, we don't have any, all the assets taken over. Then next, realization expenses. So with regards to realization expenses, what has happened? Absorption expenses 6,000. These are paid by whom? Deluxe. Whenever we are writing journal entries in the books of transferor, and expenses are paid by transferee, therefore the better option is no entry. We don't pass any entry. Clear? So this realization expenses entry will not be passed. Next entry is, once this is done, the next entry would be, once right, then prepare the realization account entry. Right, transfer. So first we'll transfer this equity shares to reserves to equity shareholders account. So equity share capital and reserves to equity shareholders account. So the entry would be equity share capital account data, then reserve fund, sinking fund, P&L. Reserve fund account data, sinking fund account data, P&L account data individually. So share capital is 20 lakhs, right? Then reserve fund is 2 lakhs. Then sinking fund is 50. Sinking fund is 50 and P&L 30. Sorry, sinking fund is 50, P&L 30. Consolidatedly it will goes to which account? Equity shareholders account. So summation is 22 lakhs 80,000. Right? So like this we have passed the entry for what? Transfer of liabilities to realization account. So once this is done, we will take up the next entry. The next entry will be payment of, realization account. We need to prepare and find out the realization profit or loss, right? So I'll prepare realization account here. So this is a realization account. So I'll post the entries first, right? Then we will proceed further. Right. So the entries would be first realization to various assets. So in realization account, 2 assets. So total value of asset is 40 lakh 10,000. Right. Then liabilities by debentures, by sundry creditors, by employees saving account. 3 liabilities. So debentures are 15 lakhs and sundry creditors is 1,50,000, and then equity share employees saving account interest is 80,000. Right. Then this second entry is done. Then third entry, PC due entry by Deluxe Limited. So these posting I am doing based on the ledgers, based on the journal. This ledger posting is totally based on the journal. So directly you can see the journal and write down. So how much PC is 32 lakhs, right? So once this entry is done, the next entry is, yes, we paid the saving bank interest. So saving realization account data to cash. So we have paid the saving bank interest which is not taken over by the transferee, that is 80,000. So these are the entries of realizations are done. Now close the account, find out the balancing figure. So balancing figure would be, so as it is realization, so the summation of this I will do first, that is 32 lakhs plus 80,000, then 3280 plus 150 plus 115 lakhs. Total is 49 lakhs 30,000 I am getting. So this is 49 is not here, therefore, so both the sides I will write 49 lakh 30,000. All right. So this seems to be the greater value, that is 49 lakhs 30,000. Right. So once we write 49 lakhs 30,000 seems to be greater value, then balancing figure to equity shareholders account. So this is the realization profit, 49 lakh 30,000 minus 40 lakh 10,000 minus 80,000, that is equals to 8 lakh 40,000. So 8 lakh 40,000 is the realization profit. right? So once we calculate realization profit, next we need to pass the journal entry for realization profit. So what is the journal entry we need to pass? First journal entry, sorry, this is the continuation of entries. So as you are already aware, till now we have passed the entries. This is the continuation of these entries, right? So the same thing we are doing now. Realization profit entry we need to pass. What is the entry? That is so realization account data to equity shareholders account. How much? That is 8,40,000. Sorry, 8,40,000 only, right? Once this realization profit entry we have written, the next entry is payment to equity shareholders. We don't have any fictitious losses, then payment to equity shareholders. So the entry would be equity shareholders account data to what we are paying, the same PC values, that is cash to shares in Deluxe Limited. So how much? 32 lakhs we are paying. In the form of cash is 8 lakhs. In the form of shares in Deluxe Limited is 24 lakhs. So like this we need to make the payment. So like this we need to pass the journal entries in the books of Transferor, right? So once this is done, we need to pass the journal entries in the books of Transferee, right? So what are the journal entries in the books of Transferee? First entry. So journal entries in the books of Deluxe Limited, that is Transferee. First entry, business purchase account data to liquidator. Liquidator of which company? Janta company. How much the total is? 32 lakhs is the PC. So 32 lakhs. Next, assets taken over entry, that is assets account data. How much is the value? Total lakh assets is 40 lakh 10,000. To sundry creditors, to debentures, right? Sundry creditors is how much? Just now we have written sundry creditors value is 1,50,000. Then debentures are 15 lakhs. I'm doing a little bit fast. Already the time is enhanced this video. So debentures is 15 lakhs. To business purchase BP, this amount, that is 32 lakhs, right? So once this is done, what we need to do? We need to find out the balancing figure. So balancing figure would be how much? 40 lakhs 10,000 minus 1,50,000, 15 lakhs, then 32 lakhs. So we are getting balancing figure on the debit side, that is 8,40,000. So this should be written as goodwill account data. So how much excess payment we've made, that will be transferred to goodwill account, right? So the goodwill account data, the balancing figure will goes to goodwill account. Then payment to liquidator. So liquidator of Janta company account data 32 lakhs. To cash 8 lakhs. To share capital, to share premium. Share capital is 16 lakhs. Already we did in calculation of PC 8 lakhs securities premium. Then next entry is liquidation expenses, that is 6,000. How much? 6,000. So the entry would be goodwill account data to bank. How much? 6,000. Sorry, 6,000. Now final entry would be we are converting debentures. How much? At a premium of 10%. Show mortgage debentures. So the entry would be the final entry we are converting debentures. So this debenture will get closed. So debentures account data, how much? 15 lakhs. 2, we are issuing a 10% premium. So how much? New debentures. New debentures. Sorry. So new debentures is 15 lakhs plus 10%. So 16 lakh 50,000.